One of the last liquidity ratios is the times interest earned ratio. What this is income before interest and taxes divided by interest expense. So this is looks at the company's ability to maintain their interest and liability payments. So this is one of the things that creditors look for. Um, Now we're going to look at measures of profitability. So measures of profitability are things like gross profit rates, what are our operating income, what is our net income as a percentage of sales, so how much of our net income is eaten up by all of our expenses, what is our return on assets, and what are our return on equity. So operating income. Operating income is generally our income from operations. So this is before interest, before tax expenses. It's a subtotal where we look at what are the company's basic operations. It leaves out other types of revenue and expenses. So we're just talking here about sales minus cost of goods sold minus operating expenses and what is left after that. Profit margin is net income divided by net sales. This is how much income we make from each dollar of sales. Again, looking at how much income do we generate versus the amount of expenses that we have. Return on total assets. So this is net income divided by average total assets. How well we utilize our assets to generate money for the company. So how well do we use our property, plant, and equipment in order to make money? Our return on equity just looks at the return earned by management on the stockholders' investment. So this is net income to average stockholders' equity. So this is just looking at what return on the income our stockholders are earning. Return on stockholders' equity removes preferred dividends from the information. If an organization does not have preferred dividends, then return on stockholders' equity and return on equity will generate you the same information. Our efficiency and profitability ratios. So we also have earnings per share. Earnings per share helps us look at what is the net income on a per share basis. Our price earnings ratio. So what is the market price divided by earnings per share? Earnings per share is net income divided by the number of outstanding common shares. Price earnings ratio is the market price per common share divided by earnings per share. This is used by investors to look at stock values and what the opportunity for growth is on a stock. The dividend yield is the annual cash dividends per share divided by the market price per share. This shows how much cash dividends each share of stock earns compared to the market price of the stock. We also have return on investment, or ROI. So this is looking at the average investment when we look at what's the efficiency with which the financial resources are employed looking at those resources. So what is the return divided by our average amount invested? How do we decide where to invest our money based on how much money we can make from that? We also look at the notes to financial statements when we're doing financial statement analysis. So the set of financial statements is usually accompanied by several notes. Most annual statements are anywhere from 50 to 100 pages long. Those notes give us good information, especially if the financial statements are consolidated financial statements that include every single subsidiary of a corporation. The notes break that information down so we can see how individual segments, so at the beginning of the chapter, we saw how Pepsi was made of many different companies. So within those notes to the financial statements, we would see the breakdown of what each one of those companies contributed to Pepsi's overall financial statement. We also see what their accounting policy and methods are. What kind of depreciation method do they use? What kind of inventory costing method do they use? And how does that affect their financial reporting? Do they have unused line of credit? What are their potential liabilities? Do they have any loss contingencies or commitments that don't show up in the financial statements? Do they have dividends in arrears? Are there credit risks? Do they have assets pledged to secure specific liabilities? So have they pledged, some places will pledge their accounts receivable as against liabilities. So then their accounts receivables are going to pay the liabilities instead of generating cash flows. That's important information to have, especially if you're looking at accounts receivable measures as a way to generate cash flows. What if they have property, plant, and equipment, but that stuff is leveraged against debt? So that's something else to think about when we're looking at their financial statement ratios. They might have a decent asset to liability ratio, but if those assets are leveraged as part of that liability requirement where they've promised those assets if they have a failure to pay debt, then are those assets really reliable as ways to pay back those liabilities? And what is the extra added risk of defaulting on our payment? There are other measurements of financial statement analysis, and I'm going to post a couple of PDFs in my workbook for you. One of them is for the Apple users in the class because we'll be using some Excel shortcuts and tricks in our financial statement analysis in class. And so there's a list of the financial keys that Mac users would use that will be different than PC users on Excel. And then there's the other PDF is a comprehensive list of all of the various financial ratios. There should also be a one-page list in your textbook of all of the different financial ratios and how to analyze them. I know there's a lot of information in this chapter and a lot of different calculations. This is one of the chapters that ties very closely with business finance. So you will see all of this information again when you take business finance. You're also going to see financial statement analysis in many future classes. Senior seminar for one, big financial statement analysis and that. So this information is going to carry on into several different